Hey guys, welcome to episode 8. This is about our cluster algorithm and also about how to utilize this within intraday trading with pivot points. This episode is more of a webinar with myself, a bit more education involved in this episode to give you guys a little bit more of a baseline to get involved within the markets. If you have feedback about the cluster algorithm or the pivot points, please make sure to leave your feedback in the comments below. Enjoy this episode, guys.
Welcome Samuel Leach from Samuel & Co. Trading. Samuel & Co. Trading has been going since 2012 and taught over 1,500 traders in 2016.
Today we have Samuel Leach on the show.
Samuel Leach, welcome to the podcast.
I got tunnel vision for the mission, and my palms are itching, No, I can't waste my time, I gotta stay on my grind, So I got tunnel vision for the mission.
Cool. How are we all doing? We all doing good? So in the meantime, before I get started, obviously there's some individuals here that may not know who I am. So I'm Samuel. I'm the director of Samuel & Co. Trading and also head trader here. I trade currencies and stocks. And at Samuel & Co. Trading, I have a prop fund where my traders also trade funds too. So it's been a busy week moving into new offices, now settled down. So I'm excited to get this going, and I'm pretty much wanted to kind of cover intraday trading. I'm going to cover kind of what the difficulties are of intraday trading, and then I'm going to go over certain tools that can help and assist with intraday trading and what we kind of take full advantage here of at Samuel & Co. Trading. Quite excited as well to be able to introduce some of my intraday plays. We're going to be looking at my live account. I think it's very important that you obviously see me live trading and also seeing live verified stats. I'm actually in a few trades anyway at the moment, so it'll be an interesting point. Okay, so like I said, if you've got a question, all I want you to do is just to whack it onto the Q&A. But what I'm going to do is I'm just going to go over the chart and kind of cover my analysis on the markets. So it's going to be probably an intermediate level, I would say, in regards to the kind of caliber of performance that we're going to be going over. So I'm now switching over to my charts. So I've got a pretty plain chart here. Intraday trading for me here at Samuel & Co. Trading pretty much lies on the 5-minute and 15-minute time frame. Now, as you can see, I'm on a live server and live account. So you can actually see my trades, my open loss at the moment, and you can also see one of my accounts on the left here with a 205k balance. So first point, I'm trading real live money, trading real capital, and at the moment you can see if I look at some of my positions here, over 34,000 profit. So you can see what I'm doing works. My positions, obviously, they pan out, and that's why you can see a slight bit of drawdown. But in regards to the trading account, it's only about 0.5%, so nothing too scary. So let's go over the chart. So when we're trading intraday, the struggles of traders is where is the entry points and where are the exit points. That's pretty much as simple as it gets. So the first part is obviously using moving averages. Me personally, I use 2 moving averages. I use a fast moving averages and a slow moving average. Now, the benefits of this is it identifies the short-term moving direction within the financial market. Now, as you can see here, I have a red moving average, which is a 50 moving average. Now, this is exponential. I'm not going to cover why in this episode, but we use exponential. And this is a 200 moving average. So we've got a short moving average, which is, can be known as fast. And we've got a long moving average, which could also be known as slow. So in relation to this, if the 50 moving average is below the 200 moving average, we are looking at taking short positions. Okay, and vice versa. If the red is above the green, so if the 50 is above the 200, as it is here, we are looking to take long positions. Now, I'm going to try to keep this simple as I can because I've only got an hour. So if you can imagine, we can also use multiple time frame analysis, which is using higher time frames to analyze the market as well, to give us a better steering of direction. But once we have got that, we then need to look at technicalities within the market. So the first point is getting the direction. So in this case, we're looking to take short positions because the 50 is below the 200. I'm just going to flick back and just make sure that everyone is following me. Can we just confirm that everyone is following me just on the chat? Awesome. Lots of yeses, which I love. I'm glad you're trying. Brilliant. And also, if you want to ask questions, Raj is actually on live chat on our website, who is sitting here next to me, who will be helping as well. So if you have any questions that you feel that aren't that important but you want to ask, to just jump over onto our website live chat and just ask Raj. Let's get back onto this. Okay, so we've got technicalities first, right? Obviously, we want to draw in our technicals. So if I'm looking at intradays, obviously the most important part is to look at the lows of the days. The most place where I see the spikes touching and rejecting. We then want to make sure that we've got our trend line in place. Now, they're not really that relevant, in my opinion, on intraday trading, as long as we've got some sort of direction. You can see here it's been very respected. We've got our high, followed by our lower high, again by another lower high, and again by a lower high, showing that we have got good measurement and it has rejected these levels. Ideally, you would kind of want to just, zoom out on the other time frames and look at kind of a little bit more of an in-depth kind of scale to get better levels. So I'd use, if I'm trading the 5 or the 15-minute time frame, then I would look at the 1 hour or the 4 hour time frame in regards to kind of getting my schedule of technicalities in the market. So rule number 1, moving averages, 50 and 200, helps with direction. Number 2, we add technicals to the market. So this is both looking for support and resistance and also for trend line analysis. So we can see we've kind of got a small level through here where we've seen it bounce, it broke down, came back up, bounced, and then it kind of fiddled out. But you may see it reject that level slightly later and form a range. But if we zoom out, we may see that level was respected previously, which it has been as well. So we've got a few levels in play. Let's not waste too much time with levels, because believe it or not, they're not the most important factors. What are is what I'm going to add now. So we're going to add a simple indicator, which I've already got on, which is called Sam's Pivots. Now, Sam's Pivots is pretty much called GMT, Greenwich Mean Time Pivots. And what this will do is it will add on daily pivots on the market. Now, we've got our daily pivots on here. Now, daily pivots are levels within the market that are calculated based on yesterday's levels. So it will take into account the high, the low, and the close of the previous day. And then it will work out these levels. UK pivot, if I zoom out, R1, R2, and R3. Then what it will do is it will create S1, S2, and S3. So these are levels of R1 is resistance 1, resistance 2, and resistance 3. And S1 is support 1, support 2, and support 3. So this shows you where the market could potentially hold up and also where it may sell off when it hits the point in the market at the R1, R2, and R3 levels. So if we look at one simple rule that I want you to note down is it's all about building a picture about the market. So as you can see here, we have the red below the green. So that was our first point. So we have trend direction on intraday. Yeah. Our second point is, do we have levels? Yes, we do. Look, it's rejecting a trend line over here. So this is the third point. So on a trend line, we need 1, 2, and the third one is the first place we would enter if you was to simply just trend trade, which I wouldn't advise. But if we're using it to build up a picture, it's an extra added point. So we've got trend direction with the moving averages. We've got a trend line rejection, which is 2. Now, the third part, which a lot of institutional traders use, is the UK pivot. Is if the market opens below the UK pivot. So as you can see here, it opened here over the midnight period and it opened below the UK pivot. Now that's quite a significant thing, because when it opens below the UK pivot, it means that currently there is more sellers in this market than there are buyers. So that's another tick in our box. That means that we now have a seller's bias because it opened below the UK pivot. We've got our moving averages and we've got our trend line rejection. So we've got three. We've already got 3 points just from that basis. Okay, so I know I'm going quite quick, but are you guys keeping up? I'm following. Good, all good, all good. So we've got 84 people in here so far. All good. Okay, so what I'm trying to get across is we're building up a picture. The more we build up a picture, the better. I'm going to go over pivots again, don't worry. So I've got some more clarification to do just there on the pivot side of things. Let's answer a few of these questions quickly. Is the 200 simple or EMA? It's an EMA, okay, Cameron. Is this going to become a YouTube, a video at all? Martin, I can look at putting it up there as well. Yes. Cool. We're back on UK pivots now. So on UK pivots, what we're looking at here is if it opens below the UK pivot, then we're looking at a seller's market. So it's all about building up this tick list, okay? And then obviously if it comes up to R1, this is resistance. R2, even more resistance, and R3, the highest point of resistance. Now, when we're looking at this as a trader, it's very interesting points because obviously we want to look for the most optimal point. Now, the most optimal point of probability that would be in your favor is taking a short position when the market is in a seller's market with the moving averages, but also taking a rejection off of R3. Now, this is what would happen in the perfect world, which doesn't happen so frequently. It's because R3 is the highest pivot point there is, which means it's the most secure level to enter short. Now, the reason why is some statistics for you on pivot points here is only 18% of the time in an entire year is R3 and S3 actually broken. So because there's such large extremities, when the market hits one of these levels, it usually just sells straight back off again if it's a resistance. And if it's down at S3, it usually shoots back up. So obviously the further it gets away in regards to pivots, so if it comes up to R3 in a seller's market, this will be the greatest point here to short sell. Why? Because it's at such an extreme level and there's only 18% chance in an entire year that it will break through this level. So if you can imagine that in 100 times that it hits the pivot, only 18 times will it actually break that. So it gives you a high probability level to be able to short sell into the market. And likewise, if it comes down to S3, the likelihood that it will break through this is 18% too. Now, that's completely irrelevant of the trend. They're just facts on the pivot points. So if you imagine, what is the chance of price breaking, say, R3 in a bear market? The percentage will surely go down. I don't know the exact percentage of it below the 18%, but I would like to assume it would be in the 8 to 10% chance that that actually happens. That's kind of the power of using pivot points, okay? So if I go over the part again about when it opens. So at midnight, the pivots are calculated automatically, okay, at the end of each day. Now, if they open below the pivot point, which is this gray line here, then it shows there's more sellers in the market. So as you can see here, it came up to the pivot point, went to break it, and then sold off, showing us that there's not going to be more buyers in this market. There's going to be more sellers in this market. It makes the low high and starts selling off. And that kind of sets the tune for the rest of the day. If I go back a day, we can see that it quite clearly opened above the pivot point quite a lot as well. Can you see? It was well above the pivot point. And what happened? The market rallied all the way up to R1, and then it rejected R1, tested again, rejected, broke through, and then sold off. Yeah. Now, can you see the power of that rejection, how it's quite predictable, and just using the simple tool of, the 50 is above the 200, it's above the pivot point, showing that there's a bullish momentum in the market, it's in an uptrend, then you're going to look to take long positions on pullbacks and exit at your R1 points. Does that make sense, guys? The pivot points are exactly the same each day, okay? So, the pivot points will automatically update. They're going to be the same on every time frame. It's just a mathematical calculation. You can Google what's the GMT pivots and what's the calculation side of things, but, that's what it does. But what I'm going to do, guys, is I want to simplify this even more for you and kind of walk you through how my tools kind of helped me when I started. But it's simple things like that people don't tell you, which make a big difference. So if we look again here, look at all this move, this entire move on this day, it goes up. Let's have a look at how far this actual move is from open on the day to the end of the day. Nearly 140 pips this moves up. Now, I'm not saying that you're going to catch all of those moves, but if you just use the simple analytics shown of it's opened above the pivot point, okay, the 50 is above the 200, our momentum is already long. So we should know that we are looking for long positions. We're looking to buy this market based off of that fact, and that we haven't even put technicalities in yet. There's no technicals on here. There's no support levels we've drawn on, but we just know that the momentum is moving in that direction, and definitely does. You can see it rejects. It breaks straight through R1 quite cleanly, goes up to R2, rejects, sells off, hovers around, breaks, hovers around R3, and then breaks. So ideally, if I was long, I would probably be looking to exit around here because there was only an 18% chance that this level would get broken, and it got broken. So I probably would have looked to take my profit around here. But let's carry on talking about it. Okay, so here is an awesome idea because it shows you two types of markets within one day. So it opened above. The 50 was above the 200. You'll be looking for buys. Then the moving averages switch over and it starts hovering around this level, which to me shows indecision. However, you could have traded both ways in regards to this and got some clarity on the markets based off of just the pullbacks, which way the market's moving, and so on and so forth. You can see here, you get a pin bar rejecting the daily pivot, 50 is below 200, nice sell-off back to the previous low. Comes up, rejects, sells off, and you probably would have been in this position here and lost before the trend changed, and you got your pullback over here. Now, again, this may look very confusing to you, but I'm going to really simplify it in about 5 or 10 minutes, okay? So just bear with me. I just want to show you kind of, if you was to be looking at naked charts, what I call naked charts. And you can trade like this, don't get me wrong. You can see here, look, 50 is above the 200, okay? Price is moving up, comes down, rejects the pivot point. It's in an uptrend. Right, if it's going to reject the pivot, then it shows us that it's still buyers are going to be stronger on this side. So you want to be on the buy side of this because we're open and above the pivot. Buy side is very profitable throughout the whole day. You can see that. Again, let's have a look at this previous one over here. Actually opens below the pivot. The market comes around, this is around 5 in the morning. You can see it breaks through the pivot, comes up to R1, comes down, rejects. 50 is above the 200. We get our buying momentum around the pivot, rally to R1, a little bit of a stall, and look, absolute storm all the way up to R3, which is where we would do what? We would look to exit because there's only 18% chance that it would have broken through that. Now, comes all the way back down. We get a nice little pullback. And again, 50 is above 200. We're above the pivot. You could easily have entered in here, put your stop loss below the previous low, and look to target the previous high. You get a stall around here. You could have looked to exit or exit at R3. Now, by just using this, and even here, this is fantastic to see which side you should be on the market. 50 is above the 200. We opened above the pivot, meaning that we should be doing what? Buying, yeah? We should be buying because it's above the pivot point and the 50 is above the 200. If we followed that simple metric of buying when it's above the pivot and the 50 is above the 200, we haven't even drawn our technicals on. But again, look, there's a pullback here and a rally, a pullback and a rally, a pullback and a rally, a pullback and a rally. And can you see how it's just bouncing off of this pivot point throughout the day? Firmin, I've gone on baby pips and learning that way, but do you do any in-house training for newbies at all? We do indeed. It's on samuelcoatrading.com. Christopher, when you say the open, do you mean the market open at 8 a.m.? No, Christopher, I mean it will be from midnight when the pivot points are calculated. Can I rewatch the webinar in the future, Sam? You can indeed. How can we get those pivots? They're GMT pivots. You should be able to get them online. We've got our own ones in-house. You can use pivot points on a higher time frame, Stephen, although obviously you want to make sure that you're catching the entry and the bounce off of those, which could be usually within the 5 and 15 minute time frame. Is the UK pivots different from the standard daily pivots? I assume so, yes, because ours is calculated to GMT time frame. Where did these pivot points 18% come from? Good question, Harry. Just when I learned about pivot points, I was looking up the probability of it breaking S1, S2, and S3. And the ones that I really remember is S3 and R3. I think there's like a 40% chance of breaking R1 and S1, and then it drops down to like a 30% of S2 and R2 and so on and so forth. But I'll tell you, I'll find them out for you. Right, let's get back on this. Do you do any lectures for beginners? Yes, we do. Again, it's all on our website. Do you hold or close all partial losses with FX scalps before the end of the day? Yes, actually, it's really good to close out intraday trades if you can by the end of the day. How do you find the volatility and what is the best way to trade on time frame? Baranga, we'll be covering that in the lesson. All good, all good. Okay, cool. Sweet. Got through them. When it hits S3 or R3, what would you recommend in terms of the stop loss from a buy to sell example? So Marvin, I'll be going over all of that now. So we've got all of this in play, and you can see, like I said here on my screen, can you see where it breaks through the pivot? You get that rally. Look, it bounced off of S1, broke down again, and then bounced off of S2, because the further that we get away from the average on the day, so the UK daily pivotal points, the grey line, is the average of the day, okay? So the further that we get away from that, you've got what you call reversion to mean traders, which want to push the price back to the average. Because it's very rare that the market will finish on the very high of the day or the very low of the day. It will usually revert back to the averages, and you can see over here pretty much did. And that's something that reversion to mean traders are always looking to buy when it's heavily sold and get out when it comes back to the average, and vice versa. So that's why these levels work, because the further that you get away, there's more likely that buyers are going to come into the market. As you can see, S2 is quite a significant level that held on that day. It rejected R1, sold off again, went back to S1, rejected again. So obviously support 1 is the first place where price will hold up. But once it's broken S1, it then turns into the first resistance point of where the market can reject 2. So obviously, that is where we'll then look to potentially short again if we're in a seller's market. Does that make sense? What I'm going to do is I'm actually going to make this a lot more simpler now. So as you can imagine, like, it's pretty much quite stressful, right, for new traders and things like that to be able to identify, well, where do I enter and where do I exit? But if we just take the simple rules of, is the market below or above the pivot point? That's the first point. Secondly, are the moving averages in the same direction as where the price is? So if, for example, we open above the pivot point, are the moving averages in the right direction? So is the 50 above the 200? Yes, they're correlated. Okay, I'm looking to trade long today. If they're not in the same direction, you don't want to trade that currency pair, and you want to look for one where they do fall in line with, because once they fall in line, you're going to be in a better position to open those positions. Okay, so now what I'm going to do is I'm going to introduce another factor. So I'm now going to introduce the cluster algorithm, which actually is my tool, which I built and made, which now simplifies this for you. Okay, so now we've got lots of dots on the screen. Can everyone see all the dots on the screen? Everyone see them? Yep. Hopefully. Okay, cool. Awesome. So what's this doing actually? Let's explain how the tool is working so you understand what it's taking advantage of. Okay. So down the bottom here, we've got Samuel & Co. Trading Market Strength. Now, this here is similar to RSI, stochastics. except for what my tool has done is it's merged the RSI and stochastics together with a smoother moving average. So you have smoother signals, more reliable signals. Okay, so what does it mean? When it's green, it means that there's buyers in the market. There's a little black dot. I don't know if you can see. You can see it over here, more importantly. Let me zoom in. Can you see how it's gone from green to black? The black is showing us indecision. Okay, indecision in the market, meaning this is potentially turning from a buyer's market to a seller's market. And can you see how it's then said it was red this entire time, showing us that we should be selling? It's now showing us that if we are selling, there's potential indecision in the market and we should potentially be looking to get out. That is what it's doing. And to be fair, it's just broken the lows of the previous low. So you may be lucky and get to come down to here before seeing it turn. But be interested to see if this turns to green whilst you guys are on the chat. So do we understand the basic of how this is working down here, the indicator? So if it's green, it shows that there's buyers in the market. When it's black, it shows us that there's indecision and the market may be changing. Once it's red, it's selling. Black dot, indecision. Green, buying. Black, indecision. Red, selling. Are you all on the same page as me? Perfect. So now what I'm going to do is I'm going to show you how we can utilize it even more. So now we know what this is doing and kind of what cycle the market's in. It helps us understand whether we're in a buyer's market or a seller's market. And obviously, before we've even used this tool, we've already looked at the pivots and the moving averages and we've drawn our technicals in. So now let's walk you through what we're seeing up here. What we're seeing up here is clusters, and that's how it's got its name. So clusters is the problem with intraday trading is you generally miss the signals, especially trading on the 5 minutes and 15 minutes. Sometimes you're out, sometimes you're having a drink, sometimes you go make a cup of tea and so on and so forth, and you miss the positions. Now, if you look at here, the small dots are showing you, you'll get a pop-up on your screen saying potential entry on Euro US dollar 5 minutes. Now, what this is doing is it's not telling you to enter short into the market. It's saying to us that there is a potential short in the market and you need to be prepared for when the main signal occurs. That's what it's telling you. So it's saying, get ready, get ready. And then when we get the larger dot, this is telling us to now short sell into the market. Okay. So the large dot is the actual entry. The small dots before are saying that there's potential here. Once we have the signal and we enter into a short sell, we look to exit. Okay. When the indicator, our Samuel Leach traded market strength, dips below this 30 level because it's showing us that it's oversold. And when we get that black dot of indecision, we know that it could potentially do what? It could then start doing this and coming back up again, and we're losing our profits. So once it's down here, and as soon as we get that indecision point, we just look to cut our profits and take our profits from the position. Does that make sense so far? So let's have a look back at some further examples now, so we can start really weighing it up and how it falls in line with using the pivots as well. So can you see here how we had price move up? And can you see we had the indicator go green, 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 black indecision. It was saying potential sell, potential sell, potential sell. We got our entry to short sell here. So we missed a bit of the profit, didn't we? Because obviously the market came against us a little bit, but not by much. We would have looked to enter short and look to close out our position down here. Why? Because it turns black and gives us our indecision. So this tool really simplifies the entries and the exits for you. All you have to do is enter into the market. Okay. The more technicals that you work with, the better you're going to get on this. So let's go through some of them. Obviously, not all of them are going to work, but it's important for you to see what we're doing here. So we've got a sell here and a sell here. Both of those become profitable. We've got a sell here, exit down here, profitable. We have a buy here, which looks like it could have lost, to be fair. Another one here, if you missed that one, and one here that would have been profitable. So as you can see, it doesn't work every time, but the winners outweigh the losses. Again, look at these lovely trades over here. So we had one entry here telling us to get in. The exit was over here, or if you wanted to be more aggressive, you'd have waited until it came above here, which was up here. Again, entry in here. Look, it's signaling the entry. It actually gave us 3 entries, 3 large clusters, saying time to get into this market and really, get on the back of this. And the exit was up here, which showed indecision. For those that wanted to potentially close for their position here, would have closed here, or you could have closed half of your trade and taken the rest at R1 in the hope that it was going to carry on moving up. So let's go back and have a look. So this one again was a nice winner to the upside. Told us to enter in here and exit over here. Now, if we go back again, what I'll do is I'll just update these pivot points so that they show slightly more days. So we can see the pivot points coming back. Here we go. So we had our entry over here, which is pretty much the main pullback of the entire day. It told us when to buy and it told us when to get out of the market. And this tool is used by my traders here at Samuel & Co Trading on my aggressive fund. So if we look here again, we've got a lovely entry here, followed by the exit signaling over here, where it tells us to exit. Okay, let's go to the Q&A part and let's see what's questions. Would you not use the pivot points? What is the cluster indicator based on? So the cluster indicator is based on volatility in the market, the RSI, stochastics, and the smoothing of moving averages. It also looks at the trend, the current trend direction, and also a volatility reader. And then it produces the entries and exits in the market based off of where there's the potential based on your volatility. So it's looking at quite a lot of things, Harry. What EMAs do we use? So we are using the 250. Can we buy the strength tool? You can, Cameron. At the end of the lecture, I'll talk more about that if you do want to do that. Evelyn, I do plan. Use this on the majors. Yeah. Mainly all the majors. Do you find the 15 minute more reliable of the cluster? So Alistair, if it's more of a heavy trending currency, so the market's moving very strong and it's trending, then I will use it on the 5 minute. If the market is more slow, then on the 15 minutes. Do you know the win ratio of cluster? Yes, Richard, it's around 70%. Cameron, you can purchase it on the website. How are you calculating the entries with the stop? So I'll go over that in a minute, Ashley. Can you explain a buying market and a seller's market? Yeah. How can I improve a sharp ratio? I'll show you that, Alex. You can do that with cluster, to be fair. In a situation like the 7th of November, because day was buying and both EMA SPPs, when do you trust the trend as traded? I think I answered that one, Martin. If not, we can go over it. Would you not use the pivot points provided by your broker platform? No, Toby. Well, me personally, no, because they're not GMT times. Most MetaTrader 4 server times are based on Cyprus. So it's all about making sure that we've got the right schedule. So we want GMT. Okay, cool. I do consider fundamentals, definitely. Obviously, I don't have time to go over that. We've only got 15 minutes, but I do cover quite a lot of that. Lamborghini is good as well there. So yeah, let's have a look at some of the entries. Now, when we look at these positions, we can just see incredible results in regards to this. Look, sellers here tells us to exit over here when it just dips below the 30 with indecision. Sellers bar up here with an exit either here or if you waited for it to dip below the 30 here. So if we come back in time, we can see now on the current tool how it showed us that there was indecision over here. And in live time, it switched to green, showing us now that the market is now coming back up. So we shouldn't really be looking to sell now. So you only really want to sell when it's black after turning green, because that shows us where the indecision is and the market is getting prepared to sell off. Does that make sense, guys? Change the screen. It's a bit hard to see the mouse on the white background. Let me just change the background to black, see if that makes it easier. Okay, guys. So in regards to the cluster algorithm and how it's working, is there any questions that people have in regards to this? Obviously, what we've done at the moment is we're coming up to the kind of last 10 minutes about this. We've gone over the pivot points and how to analyze using the pivot points. We've gone over the moving averages and how to analyze using the moving averages. We've gone over the probability of R1, R2, and R3, and also S1, S2, and S3. And then we've also gone over the cluster algorithm of how to get in and how to get out, and then also how to use the market strength in our favor to back up those entries. So is there any questions that people have that I can answer in regards to that? Let's go over to the Q&A poll. A lot of you are asking on the chat. Well, there's so many people messaging. Can you just go over to the Q&A so I can see them? Would you recommend using the minimum stop loss for intraday with the 5 minutes? What would I recommend? I would say at least 20 to 25 pips is a very minimum stop, but ideally behind the most recent support or resistance level, depending if you're buying or selling. The best risk reward for the cluster method usually is about 1.5 to 1.6 to 1 return. You should do these more often. Thank you. Where would you set your stop loss? So again, above the most recent S1 or kind of R1. Do you consider market character, price action, chart patterns on top of your, not chart patterns, but also price action? I do on top of the indicators. Yes, Harry. New office is moving slow, Sam. No, new offices are open. I think it's your connection there, Baron. The name of the tool I've created for them is Samuel Code Trading Market Strength. It's called the cluster algorithm. It's also on our website. Do you enter on market pullbacks and consolidation periods? More market pullbacks, Alex. Cluster is better on the 5 minutes in a strong trending market, Alistair, and in a slow moving market, 15 minutes. So, you know, once you've got those basics of just understanding the pivot points, the moving averages, and a little bit of price action, using this tool will really help you in the markets for catching your positions. Obviously, again, this is the first webinar that I've done. I plan on doing a lot more, probably every other week, you know, and I will look to do this more often in regards to trying to educate and really improve not only new traders, but also my current traders and students. So that's what I'm looking to do. So let's go back to the Q&A and have a few questions for the last kind of 5-10 minutes. Do you need an Axie count to use the cluster algorithm? You do not, David, but it's what I use, what I like to use, and that's on our website if you wanted to join via Axie Trader. I believe it will help you get setting up in the markets, and it's also one of those tools that you kind of never really forget. You can use it as your secondary analysis in the markets, and it really kind of helps back up your positions. So, I mean, what you want to do is just make sure you take into account the pivot points, the moving averages, okay, and then the cluster algorithms. Obviously, I don't know, I'm talking to such a wide audience in regards to beginners, intermediary, and advanced, but obviously the more you're a trader, you obviously want to use MTF eventually, which is like multiple time frame analysis. And, you know, we cover that here at Samuel Code Trading in different programs and things like that, and a lot of other things. You can't, Andrew, but I suppose you could just chuck it on an MT4 and then trade on Team Trading View at another point. So obviously, I hope that it helps. Is there any other questions that people have around kind of intraday trading and things like that? And is a trading given in-house over the web or if purchased? Fermin, we do training over the web, but we also do training in-house here at our offices. The algo can be used, Philip, on MetaTrader 4. Philip, we don't use any other indicators. We just use those ones, the ones that are just for ourselves. It is correct, David. I do not short DAX. Do you trade with cryptocurrencies? I do. Bitcoin, I do trade. Does the cluster work on a demo? It does. Would you avoid taking entries with clustering lead up to high impact news? Yes, Alistair. Thanks, Sam. Been awesome. Good stuff. I'm glad you enjoyed it, Andrew. And most importantly, guys, going forward, I've got a YouTube channel. It's just literally youtube.com/Samuel Leach. We've been posting educational videos on there for our followers. And also give us a follow on Instagram at Samuel Code Trading. and I'll try to make sure that we do these things a lot more. Do I trade when there's big news releases? I wait, actually, Marvin, until the news release is finished. I do not trade binary options. Kurtie will email this out for people to re-watch this. I'll get Raj to help out with that. He's also on live chat answering any questions after this seminar if anyone has any questions about trading. Do you personally still trade when there is a big news release? I've answered that one. Awesome, Alex. I'm glad you're enjoying Verified Lifestyle. 3 minutes left, guys. Hopefully this will smash up my FX profile. I hope it does, Mo. Where can we see the recording of this? Alistair will be emailed out. You're a star. Thank you. No worries, Marvin. Where can I watch the webinar? Like I said, Antonio, I'll email it out. Amazing webinar. Thank you, guys. Sam, can you be the best man at your wedding? I can indeed, Baran. Drop me an invite and I'll make sure I bring the squad. It's coming up 8 o'clock now. I've got to be back up in the office at 6. So it's a long old day and I've still got to finish up some trades in the market too. Do your traders come up with all the same trades? They don't, David. We all trade individual currencies. Some trade stocks, so on and so forth. So we're well diversified. 2 minutes left. 2 minutes left. No worries, Alistair. Do you especially trade on the market, opening, close? I trade GMT, so UK, roughly 7:30, 8 o'clock, all the way through to 4:30. Thank you very much. Learned so much in the hour. Good stuff, Fermin. Sent you an email earlier, Sam. Would be grateful if you could pick that up and let me know. No worries, Martin. Is cable going to go through the sky then? Hopefully, Andrew. Where can I watch the webinar? We'll be emailing it out. No worries, Alex. Thank you for this one out. No worries. No worries, Martin. No worries, Cameron. Awesome. All right, you guys are really not helping me. You're writing well done in the thing. Any book recommendations? Harry, Chimp Paradox is a great book to read. Thanks for this. God bless. No worries, Marvin. It's better than the 5-minute scalper. Alex, yes, it is. Yeah, it's more secure, but it's using the 5-minute scalper strategy behind it. Right, guys, 1 minute left. Next webinar will hopefully be in a couple of weeks. Philip, I advise using Samuel & Co. Trading and then using AxiTrader. It's the best broker. 5 minutes and 15 minutes is the best one, Mo, for using the cluster algorithm. The GMT pivots, Joe, we can sort those out for you. I think we're done, are we? Awesome, guys. Take care. And thank you so much for joining me on my first webinar. I hope it was educational. I know it was a little bit rushed. There's a lot of information for me to try to get across to you guys. And, take care. And I'll catch up with you all soon. Don't forget, you can always drop me a message on Instagram at Samuel & Co. Trading or Samuel Leach on Instagram. And do follow Verified Lifestyle on YouTube. It's youtube.com/Samuel Leach. Thanks a lot, guys. Take care. Look after yourselves.
I hope you enjoyed this episode, guys, about cluster algorithm trading and also pivot points. If you have any comments or feedback, just leave them in the comment section below. Make sure you subscribe to the channel and also follow us on Instagram at Samuel & Co. Trading and at Samuel Leach. I look forward to catching you in the next episode, guys.
You'll feel away. You'll feel away about me. 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 You'll feel away about me.